Good morning once again, and welcome to the Haven Financial Group radio show. I'm Larry Kallevig, founder and CEO of the Haven Financial Group. I'm with Glenn Ramey, insurance expert at Haven. And the takeaway from the last segment, Kim, navigating healthcare options in retirement can be very, very, very complicated. From Medicare coverage to long-term care strategies, understanding your choices, really getting educated. We're just scratching the surface today, even though that there was a lot of information in that first segment. So give us a call. Contact us. You can tell that Glenn really knows his stuff, as well as Isabella in the office and other experts in their fields at Haven Financial Group. But 612-504-8400. Come on in and visit. Get your questions answered, and then you can make educated decisions. So, again, life insurance, how does that factor in?
Right. Before we get to life insurance real quickly, there was one last thing I wanted to pick up from the last segment. We were after talking about long-term care, and that's health savings accounts. Talk a little bit about that, if you will, Glenn, because I think a lot of people at a younger age hear about this at work, and maybe it's not explained well, and they don't take advantage of it the way they should.
Yeah. So think of an HSA as not just funding one medical event year. It is the ability to build up a savings that can be invested to receive a greater rate of return on a pre-tax basis, with the money not only going in pre-tax, but coming out pre-tax, and the growth not taxed, right? So it's a way that I see clients that I work with today pre-funding their Medicare premiums with their HSA, pre-funding certain long-term care insurances with their HSA. Mm-hmm. So an HSA is a powerful tool that allows us to put money away tax-free, have it grow tax-free, and then use it tax-free as long as it stays within the scope of those medical expenses that they're allowed to use it for. So I think it's a great vehicle to help supplement our known cost in retirement when it comes to healthcare.
Absolutely. Just wanted to touch on that briefly. Again, if that's something that's offered to you, it's an opportunity. Maybe you need more clarification. Glenn Ramey here at Haven Financial Group can walk you through that. 612-504-8400 is how you get hold of these folks. Let's talk a little bit about life insurance. You mentioned life insurance in the last segment because life insurance can be related to your long-term care. Life insurance, I think for most people is just, when they think of it, they think, that's something that pays out when someone I love dies, and it helps me to get them buried and maybe cover, some bills that are outstanding and that kind of thing. But life insurance has really changed over time, has it not, Glenn?
Oh, it absolutely has, and definitely in good ways, I would say. And we can put those life insurance things into kind of three buckets or three components, right? So let's go briefly through those. You have term life insurance. This is what most people are used to. This is my working insurance, right? This is about covering liabilities like I just bought a house and I want to make sure my family is protected. And if I'm not here, that there's a way to pay that house off, or replace my income if I pass away prematurely so my family isn't there without the income I would have brought in, right? Because it's bought for a duration, 10 years, 20 years, 30 years. And typically, well, we hope, right, we don't pass away in those 10, 20, 30 years because those are still our young working years, that it has a very low cost associated with it. But it does fit that niche of a liability, right? I'm worried about a concern that has a finite period of time that concern exists. And when that concern is over, I don't need that insurance anymore. I can let it go away, which is why we buy it in those blocks of time.
Sure.
If we're talking about more permanent, we call life insurance policies, there's two types of policies that's typically going to fall into. We have our whole life insurance policies, right? They're designed to last, right, our whole life. These policies are with guaranteed premiums, guaranteed death benefits, guaranteed cash value accumulation within those policies. But understand those guarantees aren't free, they come with a price. So think of the life insurance on the whole life side as probably being one of the more expensive ones that we can buy because of those explicit guarantees are built in there. And then we have something called universal life insurance policies. These are kind of a bridge between term and whole life policies. They're permanent life insurance policies like whole life, but they provide more flexible premium funding options. Still have the same cash accumulation a whole life policy might have, but now that cash accumulation is tied to market returns, not necessarily invest in the market, but can be, but also shadowing the market. So if I can divide that into indexed and variable, indexed life insurance policies watch the market and give you part of that return back without a downside. There is no negative numbers on an index policy. It's either going to grow or stay flat a year. Variable, yeah, we put your money into the stock market. It's going to grow like the stock market grows, and it's going to go down like the stock market goes down. So I would say anyone in retirement, be wary or knowledgeable about the variable life insurance you might have in place, because as your costs increase, the time horizon needed to recover from a market correction becomes harder to recover from later in those policies. I think a variable might be good for a younger individual with 30, 40, 50 years to look at it. Not so great for the individual that's reaching the last 20 to 30 years they might have.
And that actually brings me to my next question. That's how frequently do you think people need to sort of reevaluate the type of life insurance that they have?
Super important question, Kim. Super important, because this is something our firm does on a daily basis with our clients. We're wanting to review existing life insurance policies because complacency can lead to problems, right? If we're not paying attention to these things, we might find out something's not going the way we intended. And if we're not paying attention to it, by the time we find out about it, it might not be something that can be corrected anymore. So we encourage individuals to have what we call life insurance reviews. Let's look at the existing policy projections from the insurance company to make sure we're not going to face a solvency problem where the gains the policy we're supposed to receive are now not enough to cover the internal costs that are happening within those policies. We want to catch those things while they're still correctable, while there's still something that we can do about them. We also want to make sure we're getting the best deal. This life insurance market is evolving. Life expectancy is getting larger, not smaller for the most part. So as we live longer, the cost of insurance goes down. And so it's good that a 20 or 30-year policy might have seemed like the great deal at the time, but in a review, we might find out you can get that much or more insurance without even upping your monthly premiums by redoing that policy all over again with a new company. And then let's spin that back onto that long-term care component you mentioned there, right? Today, we can now add special riders, they call them, to life insurance policies that say, this life insurance policy now isn't just for someone else upon my passing. Now it could be a potential funding mechanism for those long-term care bills I might incur. So now it's partly for me too, and not just for someone else upon my passing.
Sure, absolutely. What do you think is the most important thing, when it comes to life insurance? I think, sometimes people are in the dark as they go and they speak to an agent or they speak to someone about it. What are the keys that you want people to make sure that they ask and the red flags that they watch for?
Sure. The first thing is need, right? Have we identified why, right? I'm always starting there with any consumer I'm trying to help, right? I want to first say, what is the goal behind this insurance to make sure we're actually achieving something? Because sometimes you're going to see a representative out there trying to pitch a life insurance concept to you or an option, and they haven't identified that that's something you actually need. They're just trying to convince you it's something that you should want, right? So we want to start with the needs analysis, right? What are our needs? Where does this life insurance fit into that goal? And then make sure the life insurance meets the need. Right? Maybe we are just worried about final expense, something to pay those funeral costs. Don't need a big policy like that. Maybe we're concerned about the loss of a social security check when the first of us passes away to help fund retirement income in retirement. Maybe we want to be generous and gift individuals or institutions, make life insurance part of our legacy planning. Or maybe we have estate planning problems. Maybe we're such good savers that the state or the federal government might want some of that money upon our passing. Life insurance could be a way to fund the taxes that money might face without actually using your own money to pay those taxes with.
Okay.
Kim, and I just want to speak to the listeners too, and you're hearing us talk about life insurance. Be very careful. Glenn and I see some common denominators and consistent when we do these reviews of some of these big name brand companies. I'm not going to name them. And they try to do the same thing every time, big life insurance, big long-term care, and the cost is extraordinary. There's better ways, there's better means, there's better options out there. And our goal at Haven Financial Group is we want to lay out all the options, make you have an awareness and an understanding of why, like Glenn said, why do you really need it? I mean, there's going to be salespeople out there that are going to try to sell you something you don't need. Well, identify, do I need it? Why do I need it? And then understand the options that are out there. Don't get caught in, Glenn and I, he knows exactly what we're talking about right now because we see it on a weekly basis. Oh, here we go again. So I can just beware.
Absolutely. And thus, Larry, why I asked Glenn that, are there some red flags and some things that you need to know? Because I loved what his answer to find why do you need it? If you can answer that, then you're maybe headed down the right path. The number is 612-504-8400. Let me give it to you again, 612-504-8400. That's how you reach our friends at Haven Financial Group. Let them know you heard us here on the radio. Let them know you heard Glenn Ramey and that you've got some insurance questions, or maybe you're just interested in putting together a retirement portfolio, and now is the time. Give them a call, 612-504-8400. Let's talk about annuities on the other side of the break. This is the Haven Financial Group radio show.